Here's a topic not spoken by anyone, but it's okay. The ARCa Bulls team is here to bring you some much needed data to gain an edge over price action in the coming days and weeks. An occurrence that happens only once per year just happened on Friday, and it's critical for us to foresee the implications. Welcome back to the channel on the Super Saturday. This is ARCa, and let's pop into GameStop. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive, right? Let's go ahead and take a look at GameStop here on the weekly chart, and I just wanted to go ahead and point out to you that we were expecting a weekly candle to close in this shape right here, right? If you remember the analysis that we put together just a few days ago, this is exactly what we were talking about, right? And the candle closed very similarly to what we were observing, right? Now, there is a reason why, right? It just so happens that the prior bar on the weekly time frame, we needed to retrace 50% that bar, right? So that's kind of what we did, and yeah. So what I'm speaking of here, you guys, is yes, we definitely have an occurrence here that happens only once per year, and that is this. Well, I've already talked about it to you guys live, right? But anyway, here it is: the weekly, the bi-weekly candle, the monthly, bi-monthly, quarterly candle, and semi-annual candle, all of those candles closed on Friday, market close. Okay, you guys, so yes, the semi-annual candle, it is a 6-month candle that closes only once per year, intra-year, right? Of course, it's going to close in the 12th-month, right? But that's into the new year. So, yes, we have a macro close, and we have to foresee the implications based on that, right? So I did come up with a fair, oh man, wow, it is a fair bit of data here for you guys. I have studied the price, and I've actually taken price analysis here into consideration. Open, high, low, close, intraday price for the entire trading history of GME's price action on all of those time frames, right? So I actually came up with something called the Jolly Rancher chart, right? So this is actually something for us to observe here. And what I really want you to focus on is on this side of the analysis, right? So why this side is because what I'm showing you here is the bearish retracements after bullish closes on average, right? Or I'm sorry, what happened over all of these closures on the over its entire trading history, right? So 46 semi-annual candles, all that good stuff. So what that means is that, for example, here we have 2 retracements that have been of a bearish nature in the weekly time frame out of these amount, and this is the bullish retracement on the weekly close, right? So this is your weekly close, the bi-weekly close, monthly, bi-monthly, quarterly, and semi-annual, because these are all the time frames that are closing, right, or that just closed. So what I ended up doing was also testing, I'm sorry, what I also did is test the weekly, bi-weekly, monthly, bi-monthly, quarterly, and semi on the 10 to 20 to 30% retracement as well, okay? So the numbers are pretty consistent almost all the way around, right, which just marks off that more often than not, right, we will get a type of retracement on the candles depending on where we closed. So how we closed has a lot to do with how this is going to be figured, right? So now that we know this analysis is kind of gone, right, let's just go ahead and get rid of this here, this, and give ourselves the example of the weekly close, right? So if we are talking about closing one candle and then retracing to the 50% of this candle being that we open the new one here, right? The typical thing for a price action to do is retrace to its 50, right? So this candle closed, and this candle, the one that we just closed today or yesterday, it retraced to its 50%, right? So that kind of happens normally. So where is the 50% for the weekly candle that we're observing here now, right? So the weekly candle that we have here is already at that 50%, right? So that's very curious already. So let's go to the bi-weekly chart and see what's up, right? So this is going to be the bi-weekly, and this would be the range. And it's already telling us that the bi-weekly would have an upside, right? Let's go ahead and start taking them one by one, because I have a feeling here, guys, that we may actually have to make the Jolly Ranchers analysis a two-part thread, right? So we're just going to go ahead and make this the first part, and then we're going to continue GME's second part on maybe Sunday, right? So here we're going to go ahead and display this, and we're going to be as consistent as we can be with this, right? So we're going to write here that this is the bi-weekly retracement zone, right? Okay, so we're gonna name it just like this, and here's that writing, right? So here you go. Let's just go ahead and start taking our the price data as well, right? So this is gonna be the bi-weekly zone right over here, and we're gonna make them as we're gonna make them pretty small here so that everything can kind of fit, right? Because we're gonna be looking at multiple time frames here. Okay, so now we have the bi-weekly retracement. Great. Now we can get rid of, or we'll, actually, no, let's just go to the monthly close now and see what that monthly candle looks like. Well, it's freaking massive, right? So, so let's just go ahead and take into consideration here what the retracement would be on a monthly close, okay? So that would be pretty much it right there, right? 35 to, I guess, freaking $40. That's ridiculous. So what I'm going to do is just mark off this. Oh, actually, you know what? We could do, look left. Okay, so there's confluence right in here alongside the top of this wick here. And I believe that could be it since 2002 or 2003. It's been a while. Okay, yeah. I think we're just going to go ahead and take into consideration just about here, right? So around 37.20. So let's go ahead and mark that off, right? 37.20 would just be like this here. And that'll give us the range of the monthly. Just like that. Okay. Now, since we already have the bi-weekly written, let's go ahead and do it here as well. Bi-monthly retracement zone, right? Okay. So now we have that, and let's make sure that we can put our price tags on it as well, so that we can maintain, so that we can maintain some type of control or consistency with our analysis, right? So here we go. And this is the zone, the completed zone, right? Okay, good deal. Now, let's go ahead and take a look at the bi-monthly, because we also got that close. So the bi-monthly candle is just this massive, enormous thing, right? So you can see what I'm doing here, right? So which usually tends to be very interesting for us, right? All right, so it's showing here that we are very much confluent to the 50% retrace of the bi-monthly, right? Of the, that was the monthly that we looked at back there. Oh, dude. If that's really the case, then that's crazy, guys. So check this out, right? Here's the monthly, right? And then now let's undo that and put this thing onto the bi-monthly. So yeah, it's about the same place. So we're going to name this the bi-monthly, monthly and bi-monthly. The reason why I messed up here, guys, is because I've already done this once, right? I did it live, I think a couple days ago. And I'm kind of familiar with this already. So I just want to repeat it again here so that everyone's kind of in the know, right? So what we're going to do here is we're just going to extend this just a little bit to give the entire range of the monthly and bi-monthly iterations, right? So here we go. 35.37 to 37.77. It's within a daily ATR, so it's still okay. We could really benefit from things like that. So now let's go to the quarterly chart and see what that's looking like, right? So the quarterly chart is also the same here, right? So we're going to name this monthly, bi-monthly, quarterly retracement zone confluence, right? Good deal. So we're just going to name it that now. And the next thing that we're going to do here is take a look at the semi-annual close on this. And of course, I mean, with respects of it just being a tiny little bit different. Yeah. So now we get to name this the monthly, bi-monthly, quarterly, and semi-annual retracement zones, and confluence, okay? Good deal. So now that we have all of those things in line, we actually have a set of targets that we can observe as, I don't want to say of higher probability. I just want to say that they, based on historical data, right? We can use this, to our advantage to understand where price action can likely lead to, right? And it looks like starting from the biweekly time frame, that it already kind of looks like that we would be headed towards the upside, right? Because we're closing at 24.69 intraday, and that 50% retrace of the prior bar usually lands at 50%, of course, right? So that's landing at 25.89 to 26.69. And those targets are not out of the question. Actually, we've seen those targets happen over and over again, right? So I just kind of wanted to bring in a different perspective for you guys. Remember, I always try to do this, right? I always try to bring in a fresh approach to what we're doing here. So guys, now please remember that I would love for you to join the ArcMastersCourse for the beginner's mentorship program. It's around 5 weeks long. Please get in touch with me at ArcMastersCourse@gmail.com so you can get access to that. And of course, you guys, what I have here on the links on the left and the right are very much going to expire soon, right? So this is actually the once in a lifetime opportunity to get this at this price, right? And so just pay it one time here and join the ARCa Bulls trading team, where we observe the financial markets and trade together every single day. I shouldn't even be telling you about the hundreds and hundreds of percents that we managed to gather this week all together, right? So make sure to either join the team or both join and get inside of the master's course, right? I want to see you in class. I want to see you make a change for your trading career, right? And let's just go ahead and get you to observe the broader markets and price a better way. Okay, guys, I really appreciate you for stopping on by. We're going to go ahead and make a second part to the Jolly Ranchers series here, right? So it's going to be a part 2 coming up on Sunday. So heads up on that and keep a close eye out on it, right? But I appreciate you for listening, and I do hope you have a great weekend. Let's go ahead and cut it out here. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your weekend. And I will catch you at the bell on Monday. Adios. Oh, yeah.